My name is Darren Joseph from HTJ.tax, and we're the team that seeks to demystify the sometimes confusing world of international tax. And today we have the honor and privilege of having another conversation with Mark. Mark, could you introduce yourself?
I'm an advisor to the entire financial industry on CRS, FATCA, and CARF, and I've advised the OECD and the EU Parliament and the EU Commission and the German government, etc. All this is on my website for anybody to look at.
Fantastic. So today we want to focus on UK trusts and UK underlying companies when it comes to wealth management, and especially now when we're spoiled for choice. There's so many jurisdictions all over the world. Why consider using the UK as opposed to like one of the Caribbean or the Middle East? What makes the UK special?
Okay, so besides the UK having the most prestigious reputation and not having problems with banks keeping the account, because people using BVI or Seychelles or Marshall Island, they're being kicked out by the banks. But no one's going to kick out a UK structure, especially when it's a UK trust and a UK underlying company. But surprisingly enough, I wouldn't touch anything else because of the UK benefits for not only wealth management but confidentiality. And this is a surprise to people. So the main reason why use the UK, well, there's four reasons, okay? Number one, which is pretty unique, the FATF and the OECD came down hard on all countries around the world to use the FATF definitions of beneficial owner, whereas the UK has always used person of significant control. And surprisingly enough, the UK listened to or succumbed to the OECD pressure to use FATF, which is a lot broader than person of significant control, but only for trusts, because trusts are international. But they didn't budge on their UK companies because they said, well, the UK companies are incorporated here, we have a lot more control. But saying that, we'll get into why using person of significant control is advantageous over the wider FATF. The second reason for using the UK is the UK is very generous in allowing non-residents to be the trustees, whereas in many countries around the world, if you're a trust, you must use, or a foundation, you must use at least one local domestic person or use an agent or a corporate service provider, whereas the UK just allows non-residents to be the trustees without any nexus to the UK. So the other reason is if the UK company owns its investments through another layer, such as PPLI or a fund, then it's easy and legal to file a dormant report because there's no significant accounting happening at the company level. It's happening below. And there's advantages for filing dormant, which we'll get into. And the main reason I use it, if a UK trust uses non-UK trustees, then if those trustees are, say, instance, in a non-participating CRS jurisdiction, then that trust is out of scope unless it's a passive NFE. But that's all I want to say now, that the UK is very beneficial to use for confidentiality and for wealth planning.
Okay, but when it comes to confidentiality, so if you use, for example, the BVI, yes, you have to provide a whole lot of information, but it remains offline. It's in a private registry. Whereas in the UK, everyone just Googles Companies House, right?
No. I'd rather answer the questions as we go through, but what you've said is a fallacy. Just to quickly answer that, the trust is not registered if it's a non-UK trust, non-resident, not at all. So there's nobody to even ask with exchange on demand. And the US use of person of significant control, the beneficial owner is the trustee and not anybody else. So there can't be questions asked, whereas the others, the trustees holding it. But exchange on demand can get that information. But we'll get there just now.
But I got that. But at this particular point, we were talking about UK trusts with UK underlying companies.
Now, the next few questions are going to distinguish the different types of UK trusts. They're all UK trusts, but there's different types of UK trusts, non-resident, non-UK, etc. So I'm not talking about onshore UK trusts, but the others are variations of insignificant impact on those different variations.
Okay. Thank you very much again for sharing your incredible insight. What's the best way for someone to find you or to reach out to you to get in contact?
My website, co-ownershiptrust.com, and then you'll find 850 articles.